Talking about the dealer cycle or trend. Market maker trend can be labeled like this. The anchor point is always the W or the M. So in an up cycle, the trend will be W, V1, V2, and M. Okay, let me grab my pen again. V1, V2. Okay, so the trend is the dealer will, false move week beginning, vector to the low, come out of the consolidation, make his vector to induce traders to take short positions, pull back aggressively. This might go on, the anchor point might go on over 2 sessions. It might be a multi-session W. This can form on Monday, and leg 2 can form on Tuesday. Again, big picture stuff. The dealer then pulls away, goes into consolidation. Okay. Counter trend is ill-advised at V1. We expect V1 to come out here. If it's a W, great. If it's a visible stop hunt, that makes it a safety trade. Okay? Next night, same thing. The dealer goes into consolidation. We expect V bottom or W bottom, and to end the cycle on an M. That's the cycle. This occurs over 3 days. 1, 2, 3. Now, some variations can be the dealer can hold a level and work the crosses, or he can simply move up level 1, the rest of the week just trade sideways, and then level 2 and 3 will come in another week or a week later. They vary the way they move the levels in order to handle the crosses and move the pairs up in a different fashion, and I'll talk about that. Okay, next slide. Okay, here is an example of a market maker uptrend. $43 pip box, the dealer fakes to the high, railroad tracks, he corrects big, monster vector candles right to the blueberry, pulls back, makes a W, and then you have level 1, day 1 rise. Day 2, stop hunt low, double pins to the bottom, railroad tracks with pins on them, quasi-hammery type things, rises. Day 3, stop hunt low rise. But you notice that on day 3, he fails to take out the previous high that was established in day 2, denoted by the blue tracer. If the dealer starts pulling off of the high that was formed, this is probably going to be your high. Okay, remember I showed you that chart of Australian where it was like this? It was sideways and then it moved in the U.S. session. That was the high. This is no different. It's just on a larger time frame. That's all. The dealer set the high late U.S. session, came near it in Asia, failed to break it. Came near it London Open, missed it. Again with railroad tracks. Never took out the blue tracer. Never took out the high that was formed. Okay, if you didn't get short on these pins here, that's okay. Because the next night, after the peak is locked in and you realize this is level 3, looking for reversal time, he comes right in the brink shadow and offers you pins to the high side. 3 days of rise. The dealer shows level 3 behavior. We anticipate the high, the trap up here. We anticipate the correction because the dealer has trapped the volume to the high side by failing to make an extension of the high anymore. The high is locked. This is in essence a safety trade because he makes a V top or an A top with pins to the top side. He takes it all back. So market makers took 3 days to build it up and one day to destroy it. Okay? Build up the retail traders, build up the retail traders, build up the retail traders. We got a bunch of them. Sorry, just kidding. Gotcha. Okay, a market maker downtrend is exactly the inverse of what we just talked about. The M forms the anchor. The M is the peak formation high for the week. Trying to grab a pen, sorry. The M is the peak formation high. The lock could be within one session, could be multi-session over 2 days, could be Asia and comes back US. Understand the variations that the dealer can throw with you to keep you confused. Okay, the same thing plays out. Once the M is locked, the anchor, your job is to trade away from that by identifying the stop hunts and finding the point where the dealer locks in. One, 2, 3. 3 days. This pattern is the same thing intraday. Stop hunt high drop, stop hunt high drop, trap the traders, the pins turn to the downside, start jamming everybody up, and as a market surprise, reverse off of those numbers and let them have it. And then what? End the cycle back in consolidation. Perhaps mid-range by taking the high, peak formation, minus the low, divided by 2. Sorry, terrible penmanship on this thing. Divided by 2, okay? Counter trend coming out of the safety zone. Counter trend coming out of the safety zone is ill-advised. Okay, Steve, what happens if the dealer comes all the way back to the previous peak? Then in essence, you have a 22 peak. You have a 22 peak formation. That's a solid setup. Okay? If he makes a big fat W on Wednesday and comes back Thursday or Friday and repeats the level, you're looking at a 22 out of a peak, very solid trade. Still a 22 trade. It's just a double peak formation. You own it. Lights out, baby. All right, had to take a sip. All right, everybody good? Seeing the stuff? Understand the trend stuff. Very, very important. Thank you. Appreciate it. Thank you, thank you, thank you. All right. Typical trend, just looking at the chart. False move week beginning. 1, 2, 3 pushes to the high. Acceleration, railroad tracks, roll it over, railroad tracks again. Nice trap move, baby. Gotcha. Long. Correct. Pull back. Do not counter trend here. Do not anticipate this. See, this is the problem. Like you see this setup right here as a long, and you take that. This is an incorrect position to establish. The reason why is because it looks like it's 25 to 50 pips below the Asian range. But unless the stop hunt is more than 25 pips, you will not produce a successful trade. The only trade coming out of level 1 is this way, in line with the peak formation that the dealer has thrown. Always. Okay? Counter trend is ill-advised in A1. So I just illustrated for you right here. Do not counter. Okay? Reversal. Back into the range. Middle of the range again. Mid-range. We said, well, all time frames line up. I thought I said this already, but no, this is a retail trader's trap. Don't get caught by the market maker. By the time the higher time frames line up, market makers are already thinking about reversing price. Have an open mind, trade both ways, but understand the limitations on trading both ways. There's one part of the cycle I don't want you to trade both ways. I explained it to you. You understand the reason why and the pitfalls, why not to get caught up in it. Okay? Don't trade back towards the peak coming out of level 1. It's a sucker's trap. The dealer will show you the things that he thinks you want to see, And when you bite on those, he's got you. Trading like a retail trader. Okay. More stuff on trend. This is stuff right out of my recent writings for the boot camp, but I want to go over it in here because it's pertinent to what we're doing here. Okay? This is exactly one of those cycles that was in Australian USD a few weeks ago. About 4 weeks ago. It was a safety trade, which kind of was a quasi, it was weird because it was a quasi straightaway because the stop hunt didn't really go below the visible box. And it was just a timing issue. But this is the exact cycle, okay? This is peak formation low. You have an aggressive head and shoulders to the downside. Okay, now, do you see the pins in here? This W formation, where it formed pins in here, happens to be in the Brink shadow at the start of the U.S. session, which is the LOW, the low of the week. It all comes together. Okay? The trade carried Thursday, Friday. Okay? If you're in something, you take it off. Here was your safety trade issue. 3 legs in the Brink shadow. Okay, this was your safety trade, but what you had to do was reanalyze the data, rebracket the data. So you're looking, the dealer was consolidated in here. Right? Terrible drawing. He made his move to the low here. That's a setup for a safety. Then he railroad tracked and pinned in the Brink shadow. There's a W. Okay, this is a good, valid safety trade. The next night, the dealer gives you what? Pins to the mayonnaise, in line with the peak formation from the previous week, but he also, false move week beginning, he restarts the cycle, but it just so happens to be the continuation of this cycle. And then what does he do? Sunday, Monday, Tuesday, he gives you the reversal. Midweek reversal. Hits the high, railroad tracks, pins to the top side trap. He makes an aggressive railroad track move right above yesterday's tracer to induce anybody that had pending orders up there, stop losses short, and was thinking about it. He nailed them, picked up those orders, and he corrected big to end the week or to find himself late in the week at the same exact spot he was the week prior. Okay? Could this be something part of a bigger structure? Absolutely. Keep that in mind. Remember I told you this behavior, where you look at the 15-minute chart, this behavior over a week, if you look at a bunch of dailies, the dailies probably look like this. And he's forming this on the dailies. Possibly. We have to see. Where the first leg is deeper than the current leg in this chart. Meaning that the dealer has hit the low, spiked it, and rolled it over. Okay? Welcome to the candy shop. Don't trade until I hit the stops. I told you I wouldn't sing again. But here's the deal. Level 3 behavior, erratic sideways movement with no real direction. Okay? The dealer comes in right here and hits the stops. That's your signal. Remember I said you got to have a signal? Okay, well we have the confluence of events coming together. We have level 3 behavior, the cycle. We have a 32 pip Asian range. We have a move above the blue box, above yesterday's blue tracer, above the entire level 3 structure that was built to induce traders to go long. Anybody that took a breakout went long right there in that green baby right there. Remember I told you the dealer comes back below the previous high within 30 to 45 minutes, if he comes back above the previous low within 30 to 45 minutes, he's going to correct against the prevailing trend or rise against the prevailing trend. Okay, so what's the prevailing trend in this example? Everyone's thinking up. The dealer extended the high and came back below it within 30 minutes. Okay, how do you know he came back below it, Steve? Because it's a blue tracer, and there's the close right below the high. He went above, he extended the previous high and closed below it in 30 minutes. We expect the dealer to correct. This is a stop hunt. Railroad tracks is part of the structure. Stop hunt right there. Beautiful. Above the blue tracer, outside the structure. We know he's going to correct. Okay? Next night, you're looking for a safety trade. It's not a clean one because he doesn't give a visible stop hunt. This is, in essence, straightaway. Pins to the water. Okay? This is a 50-50 trade. The first hit to the 50 will yield at least 50 pips if it's the stop hunt or part of the straightaway trade. Talk about it. Okay, cool. All right. These are just parts of identifying the trend, the cycle, where you are, putting it together from one week to the next, understanding how it comes together. Now, I talked about the psychological support and resistance zone. Now, I showed you the Asian range is the first part of the dealer cycle of the day, right? The blue box is the first part of the daily cycle. It's the accumulation phase of the market. Well, if the Asian session or the blue box is the first part of the day, and I told you that there's bigger pictures, then the first part of the week, the first 8 hours, the first session on the first day of the week is where the dealer sets the weekly Asian range. And it's not called that. I'm just saying for you to understand. What it is called, in fact, is it's the first 8 hours of the week where the dealer establishes the psychological support and resistance zone, which is where the contracts will be straddled over the next few hours or day or so, Sunday, Monday. There's actually a system that people try to trade breakouts on this. But not understanding what we know, they get jammed up. So here's what we got. We come in, we bracket the first 8 hours of the session. Okay, the low and the high. We expect the dealer to exploit one of these levels. This is how you identify your peak formations. This is done, by the way, on the 4-hour chart for you new guys. Turn to the 4-hour chart, look at your tracer, Control Y on your MetaTrader platform will give you the daybreak or the start of the week. Wait for the dealer to set the blue box of the week, which is this, first 8 hours, Asian range. He will establish some market maker type spread, the distance between the high and the low. Picks up the breakout traders, drags them backwards, picks up the other breakout traders, goes into consolidation. Welcome to the candy shop. Don't trade until I hit the stops. There's your peak. Okay? You have now identified by the behavior of the dealer your HOW, your high of the week. This, on a bigger time frame, is this. Widen the swing, hit the stops, drop. That is what I've been drawing for you since you met me, is this. Don't you see it? Pick up the little pendings, people that bracket this stuff. Okay, so he stops everybody out on there that trades breaks. Now, you've identified the HOW, the high of the week, which is put in as your peak formation. You've identified the peak formation. What is your directional bias for how many days? Two to 3 days to the downside. Okay? Once the HOW is established, you trade away from that peak for 2 to 3 days until the reversal signal is issued. Okay? That's how you find psychological support and resistance barriers. Okay? The dealer chops you out, scares the hell out of you, breaks low, pulls back, hits the high, cuts through the psychological support, stop on high drop, stop on high drop, low of the week, peak formation, LOW, railroad tracks, pulls back in, ends the week in consolidation. The next week, same shit, different week. This is like the one we just looked at. Okay? Stop hunt, low rise, stop hunt, low rise. 1, 2, 3, reverse. Psychological support and resistance. The level is set. The dealer exploits low, comes back, fails to take out the high, does not get a close above the weekly high. This is your double peak formation. This is a big, fat, multi-session M over 2 weeks. God help the dealer because you own them. Shifts the zone away, trade away for the rest of the week. Trade away from the peak for the rest of the week. It's a good rhyme. Trade away from the peak for the rest of the week. If it comes in Wednesday, midweek reversal, to help you in this assessment, look at the TDI. Okay? Look closely at TDI. On the 4-hour chart, the shark fins are very telling when they're at the extreme. They will help you pick off shark fin, blood in the water on a 4-hour chart. 4-hour chart above the psychological or the support line or resistance line 68.32, above or below those extremes, above here or below here is very, very telling on a 4-hour chart. And I can't get it to right there, sorry. Okay? Now, how are you going to solidify this stuff in your mind? What I want you to do, new guys and people that haven't done it yet, you know who you are. You don't need to say. I know who you are. I have spies. What I want you to do as part of your research and development, your R&D, or more properly put, homework, because it is in fact homework. You guys just hate that term. I want you to go back and make me some flashcards of the things that we've discussed, that I've shown you, the pattern, to help you start to put these in your mind. The best way to do it is to put them on some 3x5 cards, print out some pictures on your printer, cut them in 3x5 or maybe the bigger size ones, paste them on there, put them on a big key ring or a small notebook, and just keep it around. Keep it by your bed, keep it in the bathroom. I don't know where you like to do your reading, but it's none of my business. Just keep the ring with you of maybe 5 or 10 instances of long trades and 5 or 10 instances of short trades. Cut out the perfect M formations, the perfect W formations, and form up the flashcards. This is what a flashcard should look like. Flashcard should have all the things we discussed. The Asian range, the vector candles extending. The blue tracer happens to be here. It touches the stop hunt zone. It forms the M. The entry is on the second leg when it confirms below the mustard or the ketchup. You have divergence in the TDI. Black out half your card and write your reasons that you would take this entry. Dealer vectors to the stop hunt zone. Comes out in 3 swipes. Shark fin above resistance band. Stuff I'm still going to talk about. Blue tracers present. And this happens to be a multi-session M. Level 3. You're a seller. How do I know it's a multi-session M? In fact, it's a 22 trade because here's the previous high. The dealer has put in the high, come back and double M'd it and corrected. Okay? Multi-session level 3 in that example. Yep, very good point. If you're incorrect in marking up your charts, it's bad homework, right? It's bad practice. That's why, here's what we usually do. You make 1 or 2 flashcards, go into the forum, and there are other people's cards up there and examples. If yours don't look like that, you ain't doing it right. If you're still not sure after finding the answer, send me a picture of your flashcard or your markup, and I will let you know if it is correct. Okay? That's how we make sure you're doing the right stuff. Alright, so the only way you're going to get solid in analyzing your behavior or learning how to make sure you're looking at the correct stuff is to do it. Okay? This is boot camp stuff. You should have a nice collection of these. If you don't, it's never too late. Complete them this week. This is what I want for the new people. That's why I left the slide up. Class is over Wednesday. Take a couple of days, think about everything that we talked about. The recordings are going to be up. Jump on making your flashcards. Listen, I'm giving you the process. I told you. We're going to take the class. You're going to have free DMR. But during the DMR, you need to do some of the things I'm asking you to do. Flashcards, identify your signature trade. And very important, don't let yourself fall too far behind. What's going to happen is when the new guys, when your DMR expires, you're going to start getting the boot camp links. One per week. And if you have the links now, it's going to go away because you're not supposed to. It was an error. You're supposed to have the class. You're supposed to have free DMR. When DMR is over, you will start the boot camp cycle. You will get 1 link a week over the summer. That will catch you up to the rest of the group. So when I come back after Labor Day, we will start another boot camp cycle together for the next 2 months, and it'll take us through Thanksgiving, and that will be it for the year. And by then, hopefully, the grace of God, you'll be making the money that you deserve to be making in this business. Okay, so the most often asked question. Flashcards need to be created on the 15-minute chart. I don't know if Carr can hear me. I don't know if he's listening, but if he is, maybe he can show you how to take some snapshots of how to do a flashcard and how to work that out tonight as part of his presentation. I kind of dumped it on him. If not, maybe we could do it during the break tomorrow, the lunch break tomorrow. Okay. What is the best trade signal? What is Steve's favorite trade? What's the easiest setup for me to identify? What is my signature trade? This is the stuff that people ask me all the time. And the answer is simple. The safety trade. The safety trade leaves little margin for error. The best trade you can take in any market condition is the safety trade with a second leg element. What do I mean? I don't mean the V-bottom variety. I mean this one. Peak formation is put in. The dealer rises off the peak. He goes into consolidation. And the blue box is formed. The dealer makes a visible second leg formation 25 to 75 pips off of the peak formation low. That is the best trade you can take. Why? I don't have to, did I get the peak right? Is that level 3? I'm not really sure. Did Steve tell me that if it does that, it might be a reset? Oh my God. All those reasons, right? If this shows itself, this is a lock. But when does it become a lock? It becomes a lock when the dealer throws the stop hunt and fails to violate this level. When the dealer throws the stop hunt back towards the peak at 2, 3, 3:30, 3:45 in the morning, or maybe he sets the low mid-London and comes back and breaks it in US box and does not violate the peak formation, then this becomes an absolute certainty that this is my peak formation. And I got him. And I know my trade will pay. At the very least, I will scratch out with 25 or 30 pips. Okay? The safety trade identifies the top or bottom of the market at that moment in time. Can he go make the peak formation high and come back and exploit the low? Yes. But at that moment in time, the guaranteed peak formation that he's trading off of is a lock. The safety trade allows you to trade in line with the peak, high or low, as a confirmed directional move, at least for the next session. The dealer will rise away from that level for 2 days, offering 50 pips like he is handing you a candy bar. Okay, you ever see they come there and they sell the world's finest chocolate for $1 at your door? They ring the bell, the fundraisers the kids do. When you identify the safety trade, just imagine a bunch of kids ringing your doorbell and handing you the world's finest chocolate. Instead of giving them $1, you can give them 50 pips. Because that's what he's handing you. When you understand this and can see it, lights out, baby. You got it. Okay, they don't do what? The trade or the candy? Someone said they don't do that in New York. They don't hand out those candy bars? Yeah, they probably afraid to hand them out. They probably would molest the kids and pull them in. Knock on the door and you never see the kids again. Okay, man. So here's the deal. I did this in boot camp and I'm doing it again. I am officially designating everyone in this room's new signature trade right now. You are all now, I christen you and baptize you, safety trade traders. This doesn't have to be your only trade, but I insist that you add it to your set and scan the market for these trades. You should be comfortable enough with this trade that you can anticipate its arrival 12 to 24 hours away. Okay? If you could see this thing coming from a day and a half away or a day away, half a day to a day away, why would you not take it? So since I'm insisting on it, let me be so bold as to lay out the rules for you. The safety trade rules are as followed. Write them down or mark the tape. It is 9:16. The peak formation high or the peak formation low has formed as the high of the week or the low of the week. This is the 4-hour tie-in from the psychological support and resistance barriers that I just showed you, where the dealer has exploited one or both of those levels and has issued a pattern on the 4-hour chart. Steve, how do I catch the peak formation on the 4-hour chart? You don't. You catch the safety trade after it's put in. Price has moved away from the area and has confirmed that this formation is real. Level 1 consolidation is crystal clear to you. The dealer has ended the day in a sideways motion of a 50 pip or less trading range. That's what consolidation by definition is, isn't it? If I told you the ideal range is 50 pips or less, the dealer has to end the day in a sideways motion, 50 pips or less. That makes level 1 consolidation crystal clear. The do not counter, DNC. Remember that this is level 1 consolidation. A sucker, and you are no longer a sucker because you have crossed over to the market maker side. A sucker trades the breakout back towards the peak. I'm not calling you a sucker, but I'm telling you, don't be a sucker. The dealer makes a visible stop hunt, one that you can plainly see, preferably above or below the blue box. But I showed you how to reconfigure the blue box with the last 1/3 to 1/4 of the action if he happens to shift the zone inside of the box. Remember that the straightaway trade develops here most often. And if you do notice that, the obvious ones are still valid setups. The obvious straightaway trades where maybe he shifts the zone and makes a W but inside of the blue box. Right leg pinned to the 50. Left leg fires, right leg to the 50. The safety trade is when the dealer issues a second leg or an M or W coming out of Asia, out of the box. That behavior at between 2 and 4 a.m. makes this trade an absolute lock. If the level is hit a third time, God help the dealer, because you got them, you own them, lights out. Okay? And I think that's what the chart was that I had up. He hit it 3 times. He came back in the U.S. for a third swipe. And that third swipe is to beat up, it's further back than I thought, is to beat up the retail traders. Okay, here. This is the segment of the market that the safety trade occurs. All right? What he did was, okay, man, it's still in the box, Steve. It's not really a visible stop hunt. Well, if you're smarter than a blue box, it is. The dealer has made leg 1 on and ended on a hammer. He made a monster pullback and hit it again with railroad tracks. The entry is either here, which is second leg, and if you waited for the session changeover, because the timing was late, in the brink shadow, he gave you a confirmed entry here. Obviously, the confirmed entry on session changeover in the brink shadow is much better, where the dealer has tapped or formed the low of the day at 9:45 or 9 o'clock, 9:30 rather, and closed out above that number. Remember what I told you? If the dealer exploits the low and comes back above that number within how long, my friends? 30 to 45 minutes. Why 45 minutes? Because you got to account for that stupid doji that they throw in between the railroad tracks called an evening or morning star. What people call indecision, which is bullshit. No one's undecided about where price is going. The only one not sure are the traders. The dealers know exactly where it will go and where it will end up. So if the dealer extends the low and comes back above within 30 to 45 minutes, price will rise. If the dealer and comes back below the high, price will correct as long as the move occurs within 30 to 45 minutes. If the dealer extends the high and stays above the previous high, the dealer will rise the price or raise the price. If the dealer extends the low and stays below the previous low, price will correct further to the next level strike zone. Very important concepts to grasp and understand. Okay? All right. Good stuff. So, everyone have the rules for the safety trade. I now baptize everyone in here, safety trade traders. If you have not done the legwork on this stuff, now is your chance. If you're new, no bullshit, no excuses. Roll up your sleeves and send me some pictures of some safety trades. And at the very least, make me a flashcard or two. I want one long, one short. Email to my inbox by next Monday. After class is over, I want you to mail me one. All right? Write it down right now. All my new guys. Okay. So, okay, I had a couple of pictures of safety trades. This is what I want you to look for. Okay? What level is this, anyone? Behavior. Thank you, baby. Level 3. Thank you. All right. What pattern appears at this level? Gloria, what pattern appears at this level? I'm going to take a sip of Diet Coke and wait for you to write it. Thank you, Gloria. Okay. If you don't know where the hell you are in the cycle, and you can't see it, and you notice that the averages are fanned out, what does the fanning of the averages tell me? That price has crossed below the averages and has been dropping for several days. How in the world would you know that, Steve, on a 15-minute chart? I know that because the dealers have to validate the retail trader stuff, and to do this, they cross the averages over and expand them out with trend acceleration. Okay? The head and shoulders appears most often at level 3. The dealer rises above, and he chops the crap out of everybody for London. Why would he do that? To handle the crosses. He beats the hell out of the level and doesn't move it to handle the crosses. That is one of those patterns, the head and what is that, the wedgies? No, it's for your underwear. What is that, a wedge, a ledge? I don't know. It's not a wedgie. That's something perverse. I don't know. It's one of those falling wedges, rising wedges. We call it a cord of wood. Yes, Barry. The dealer does this behavior in order to hold the level, accumulate contracts, and to, most importantly, handle the cross pairs. Handle the cross pairs. I'll talk about that probably tomorrow. Okay, so if we know where the peak is put in, if we know what level we are in, there is only one direction that this chop can be handled by. What is that direction? To the upside. Forget about all that. The trend goes from whence it came and all that garbage. The breakout would go this way. That's all textbook garbage. The only way that we know that by the direction this is going is by the head and shoulders peak formation low. Trap move by the dealer to induce traders to anticipate the continuation the wrong way. Okay? What happens? Dealer ends the day in consolidation. He makes a visible stop hunt. Crystal clear W formation off of the previous peak. The distance from the previous peak needs to be 25 to 75 pips. That's the distance. And if he comes back down, then it's a totally different animal. It's a multi-session peak or a 22 or a multi-session W, multi-session M, or 22 multi-session. Okay? That is an example of the safety trade. The dealer hits 3 bursts or 3 quick rises out of the area. 1, 2, intraday levels. 3, outside structure high and trap to end the day. Okay? That is the pattern. Now, since this is your signature trade, let me clean this off, and I would like all of you to take a picture of this chart. Go ahead. Jing, Screen Hunter, I think it's Control P, would print the screen. If anybody else knows any other thing for Mac, whatever it is. Some of you have a print screen button on your computer. Just hit it and get a picture of this. I'm going to leave 2 of them up for you. Okay? Visible stop hunt below the box. Safety trade. Okay, let me know if you got it. Just put a quick Y up there if you got a picture of this. And if you need to go back, alternate plus print screen. Thanks, Ray. Absolutely. Still use the same target. 50 pips is the target. Command Shift 4 for Mac. All right. You guys got it good. Okay, cool. All right. Now, the next one is still a safety trade, but there is not a visible stop hunt. This is considered a straightaway because the dealer did not make a visible stop hunt below the blue box, right? The dealer didn't exploit the low. But notice the railroad tracks in the shadow, or the railroad tracks and the second leg of the W on the mayonnaise. Okay? The dealer has worked the mayonnaise by establishing the low in Asia and not taking out that low. This is the example of one leg in the box, one leg out of the box. And some of you guys that know me, I take a shipping box in class and I put 1 foot in it and 1 foot out and I walk around the room. And people are like, what the hell is wrong with this guy? That is an example, and you'll never forget it, of one leg in the box, one leg out of the box. You have to move the barriers and the stereotypes or the things that force you to look at things in the wrong light. Whatever that is, your baggage. And understand that the dealer has made a big W, reconfigure the data, and realize that there's the low. The dealer repeats the low right off of the mayonnaise. And this, my friends, is a very nice safety trade with the mayonnaise acting as support. Shark fin low, hold the mayo. Another trade. Okay? Let me move my cursor. Please take another picture of this trade as well. Question. So okay to take mayo long even though it's in range because it's in the Brinks box. No, the Brinks is not necessarily the reason why to take this long. You're taking it long because the dealer established the low. You already know the directional bias, right? You know. Sorry, I meant to be one shoulder. You know the directional bias. This is the head and shoulders. The dealer is trading 25 to 75 pips off of this number. Okay, now, this is a straightaway trade because the dealer has railroad tracked and made a multi-session W, if you will, because he made a low in Asia and did not break the low. And notice how he sticks his neck out right there. The dealer sticks his head out, right? Isn't this kind of a head and shoulders? Okay. What pair was the first flash card? Let me see. Might have been Australian or pound. I can't remember. Okay? Does everyone have a picture of both of these? I gave you your first two flashcards. They just so happen to be long trades. All right, now I want you to develop your own cards. Here's a blow-up of the Australian one. Look at the low of the week is formed inside the Brinks with double hammers. Okay, beautiful. Okay, now, again, one leg in the box, one leg outside the box. False move late session. Do not trade this back towards here. This is why I blew this up. There's your entries. Here or here. Same thing. This is a blow-up of the previous trade. But understand, the dealer hit the low 3 times. The low was established. He pinned it. He extended the low ever so slightly. Okay, I can't draw a straight line to save my life. But that pin, remember the picture yesterday? That pin allows the dealer to go down there and open the spread and pick up what he needs. Okay? Good stuff. All right. Short side safety trade coming out of the previous week. The peak is put in on Friday. The dealer goes into consolidation. And this is a little harder to see. It's not as deep as I like, but he makes a visible, confirmed stop hunt entry. Okay? 25 to 50 pips off of the peak formation high. There's a short side trade. Let me clean my marks, take a picture. I'm doing your flashcards for you. Now you just got to write the rules on them. Okay. So, to solidify the entries on the safety trade, add a moving average or a pivot point for a strong confluence of events. The dealer can repeat the level, but it has to hold. The level, when he goes back, when he makes the first leg and he comes back for the second leg, the level's got to hold. He can spike it and come back above. He can break it to the high and come back below. But the level has to hold. Look for the stop hunt to come in around 25 to 75 pips off of the low of the week or the high of the week. That's just simply how the trade plays out. That's it. Okay? Cool stuff. Alright, it's kind of cool because look at this one. This is a big level 3 safety trade where the stop hunt was the shoulder. See that? That's pretty cool. And it carried into the next week. Alright, understand the variations, that's all. This is the weekly break. Okay, this is still a safety trade. Because you know the peak is put in from Friday, the dealer pulled back on Monday, slightly exploited the psychological support level, spiked to the downside, made traders take the break short, but we know better because the peak is put in. The big fat multi-session was put in, and the dealer simply makes a visible stop hunt coming out of London, which happens to form a safety trade and a shoulder. Anyway, I get excited. I don't know if you guys do. I love this stuff. It's so pretty. All right. Do you want? Since I'm offering up pictures, take them all. Take this one as well. It's easier to have them right now than have to go back. I understand that. So, and the tape marked 937. Write it on a piece of paper next to you. Okay. Simply throw up a Y when the collective has the picture, please. Another one where I said when you throw in an average or a moving average to help lock the trade. Look at the W, peak formation. The dealer spikes past, hits it again. He works the average, right? The low is established. I wanted you to notice on this chart the psychological support and resistance zone for the week right here and right here. Okay? The dealer slightly breached it. He comes back and taps it. Now understand in the pound, they have a decent sized spread. He can work. Okay? Notice how he ends on a nice fat hammer. Then it's game over. Okay? Safety trade set up. Okay, this is one I took on Australian. Peak formations put in, there's the pins. Consolidation. Visible stop hunt below. I took the railroad track entry. The dealer came back. I took a little heat, but I ended up doing okay. All right, that's it. This is not a trade. Okay, you're trading long coming out of the peak, period. All right, final slide on this, I think. Okay, no weekly cycle, big picture, okay. So, spend some time. Okay, so what do I need you to do for tonight? You understand the cycle. You understand the pattern intraday. I showed you the bigger time frames, the weeklies, the dailies, how this stuff ties together. I brought in to help you understand how to identify the peak formation highs and lows by putting the 4-hour psychological support and resistance line the dealer knows to exploit and to trap people at various parts of the cycle. I let you take some pictures of flashcards. I want you to start working on your flashcard set. Understand the first 8 hours of the week is the Asian session of the week, like you have the blue box intraday. I am telling you, I'm not asking you that you are now a safety trade stalker. You are adding that to your arsenal, and that should move up to the very top of your list of viable trades that you decide you want to seek. So putting it all together, where are you? Let's take a temperature of everybody in here, see how you're doing. You understand that from the slides I showed you that this is not a game or a hobby for the dealers. There's hundreds of thousands of them in these big fat rooms with backside plugins on how to beat you. You understand the cycle and how they move every day. You understand you're not going to discard your equity, your personal inventory, by balling it up and throwing it out on the street. You wouldn't overbuy perishable produce. You wouldn't throw shoes out the front door of a shoe store. Nor do I expect you to ball up your equity and hand it to these guys anymore. You should understand that the dealer makes 3 levels of rise intraday and 3 levels of rise over 3 days or 4 days based on how the week lays out. Wax on, wax off, my friends. These things should start to become clear to you now. Okay? You now have your first signature trade in your arsenal, the safety trade. You have a handful of flashcards that I've offered up to you. If you don't have them, go get them. I want you to mark those up. I want you to mark up the safety trades. I want you to start with your R&D. Carr's going to walk you through that in a few minutes of how this stuff needs to be done. Joe, good question. The safety trade second leg can be up to 75 pips from the peak formation, not 50 pips, right? Yes. The range for the safety trade to come in is around 25 to 75 pips above or below the peak formation. So if you have a peak formation high, it needs to drop 25 to 75 pips and make the stop hunt. During the railroad track pin stop hunt, at which leg do we take the trade or how do we hold off? How do you hold off is up to you, but I'm going to cover candlestick patterns tomorrow and more trap moves, okay? Okay, list of the homework. Flashcards. Four-hour markups and safety trades.